Today I'm going through the tariff updates. This is basically Liberation Day 2.0. This is July 9th. These are all ad valorem. That's Latin meaning just according to value. These are all percentages of a value. In 1962, there was a Trade Expansion Act, which has Section 232, which is being used currently to give a reason why we can put 25% tariffs on car parts, 50% tariffs on steel and aluminum. There is a potential threat at the moment that there will be a 50% tariff on copper as well. That has not gone into place yet. There's an additional threat of a 200% tariff on all pharmaceutical companies that come from outside the United States. If that were to be enacted, it sounds like it would be about a year or a year and a half out to give pharmaceutical companies enough time to start changing where they manufacture their products. So the Trade Act of 1974, Section 301, is what's being used to put different tariffs on Chinese goods. So at the moment, we're looking at a 30+% tariff on all Chinese goods, and then China has put a 10% tariff on all goods going from the US to China. So there were additional trade negotiations with the US and China. This looks like it's going to be 55% tariff on Chinese goods going into the US and a 10% tariff going on from US goods into China. But that would go into effect around mid-August. Those are still not formalized at the moment. So if you want to make any type of motor or anything that moves with electronics, you need to have basically a magnet. And the strongest magnets that you can make are rare earth neodymium magnets, 90% of which come from China. So this is a big deal. They started exporting these materials again to the United States. This is also big for the EV industry because without that, you're not going to have an electric motor that can basically power a car. Another big win is there's 0% tariffs for any items covered under the 2020 US, Mexico, Canada agreement. This was at 25% between the US, Mexico, Canada, and there were some issues with that because that was breaking our agreement we've previously made. For most other countries, we're at 10% at the moment. I've also seen that there's some thought of increasing this to 20% for the EU nations, but if we do that, the EU will likely put 20% tariffs back on the United States. What we got announcements of were basically the tariffs that will go into effect starting August 1st. So you had your Liberation Day in early April, you had your 90-day pause starting April 9th, and now we have letters sent out on July 7th. So Japan will have a 25% tariff, Korea, effectively South Korea, will have a 25% tariff, South Africa at 30%, Kazakhstan at 25%, Laos at 40%, Malaysia at 25%, Myanmar at 40%, Tunisia at 25%, Bosnia and Herzegovina at 30%, Indonesia at 32%, Bangladesh at 35%, Serbia at 35%, Cambodia at 36%, and Thailand at 36%. On July 2nd, there was a negotiation between the US and Vietnam. There's going to be a 20% tariff on goods made in Vietnam coming into the United States. Any items that are basically made in a different country, shipped to Vietnam, and then shipped to the United States will have a 40% tariff on those goods. And the reason for this is basically if higher rates are in Thailand, Cambodia, Myanmar, Malaysia, Laos, or say China, they would likely have shipped it through Vietnam and basically halved whatever their tariffs were. So that's why that was put in place. And Vietnam agreed to have a 0% tariff on all US goods. They're looking to buy SUVs and things like that. If you think about it, Vietnam doesn't really buy much from the US to begin with. Vietnam ships out a ton of textiles to the United States. So it's not going to make much of a difference if they actually put a tariff on the goods that we sold to them. What are the top US trading partners? Number one is Mexico, number two is Canada. Between these two, you're looking at like 28 to 30% trade. So nothing has changed here. We're actually at 0%. So the two biggest countries we trade with, there's 0 tariffs. China, we do have some negotiation with them. we are getting rare earth metals, and it looks like we're only having a 10% tariff on US goods, and it looks like a 30% tariff currently for most goods, but that's probably going to go up to 55%. But that's not set in stone at the moment. Taiwan, there's no change. Germany, there's no change. Japan is at 25%. Vietnam's at 20%. South Korea is at 25%. Ireland, India, we didn't see anything. We didn't see anything for the UK, Netherlands, Switzerland, Italy, or France. So the US actually exports more goods than we import from the UK, the Netherlands, and Switzerland. So also, why would you then penalize those countries so they're not on the list either? So a good question to ask would be, why did the stock market still go up today? Well, for two reasons. One, the one big beautiful bill that came out, that's going to be inflationary. That's also going to give a lot of consumers more money in their pockets, and it's going to prevent an increase in tax rate effectively for the majority of the population. So that's going to help drive consumer spending, and at least they have more money in their pocket. And the other part of this is that there's pretty much little change to any of the top trading partners, the top 5 at least. We only start to see any change when you're talking about the 6th, 7th, and 8th trading partners. And then we don't see any change for the 9th through the 15th trading partners. Yes, these may be high at 25 to 40%, but in the grand scheme of things, there's not actually a lot of trade that goes between the United States and the countries that were given letters. It's not that big of a deal. I mean, it's still going to impact things and the cost of some textiles and cars, but the cars were already there, so that's not really a change. It's not, a massive percentage of the US trade. Well, thank you for watching. If you like this type of information, please subscribe. I also cover how to make more money, how to save, and how to invest. I'm also an entrepreneur, so I go through how to start businesses, how to limit risk, and how to maximize returns.